This week, many retirees appear fine at first glance, but are they? The latest data confirms what we've long expected. Today's retiree is under more financial pressure than they were just 1 or 2 years ago. And that has direct implications for you as a reverse mortgage professional. We'll explain why and what it may mean for your business. We'll do that right after this short message from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back. Good to have you here. The newly released 2026 Retirement Confidence Survey from the Employee Benefit Research Institute and Greenwald Research, one of the longest running studies, by the way, of its kind, paints a very clear picture of the financial strain that today's retirees are facing. Confidence is falling while financial pressure mounts, and the numbers back it up. According to the report, fewer Americans feel confident about having enough money to live comfortably in retirement, with just 58% of workers and 71% of retirees saying they're confident they can keep up with inflation and the cost of living. Even among retirees, nearly 3 out of 10 are no longer confident that they can maintain their standard of living today. Also, 1/4 of workers with lower confidence points squarely to the impact of inflation and the increasing cost of living. At the same time, fewer Americans are feeling financially secure enough to even handle a small emergency expense. And then we have a growing number of respondents in the report that say debt is becoming a serious problem, often fueled by rising housing costs, healthcare expenses, and of course being compounded by debt payments themselves. Each are negatively impacting Americans' ability to save for and live in retirement. While confidence is declining across the board, there's one asset that continues to quietly carry more weight than ever before: home equity. The survey reveals that home equity, real estate, or rental income is already part of the retirement income mix for many Americans and for most retirees. Not surprising, since the home is often their largest asset. And that applies to even the seemingly well-heeled mass affluent. Don't assume that a homeowner who does appear financially stable or who lives in a beautiful home on the surface is actually, in fact, strong financially. Many, if not most, are feeling the pressure beneath the surface. And that's why asking the right questions matters more now than it ever has before. Rising property taxes, homeowners insurance, healthcare expenses, and everyday living costs, they're eroding cash flow and draining savings account, even for those that are sitting on substantial sums of equity or even accounts. And what looks like wealth on paper doesn't always translate into liquidity or financial confidence in real life. The Employee Research Benefit Institute's report found that 41% of retirees now say that their expenses in retirement are much higher than they had anticipated. And nearly half of workers admit they don't even know where to go for reliable or sound financial and retirement planning advice. Rising costs, declining consumer confidence, limited guidance, and a massive concentration of wealth that's sitting in home equity. It's clear that today there is a widening gap between what retirees have and what they can actually use to support their lifestyle. And this gap is exactly where you, as a reverse mortgage professional, come in. Because the reality is more retirees need you and your services today than they did just a year or two ago. Not because reverse mortgages have changed, but because their financial condition has likely worsened. People are retiring earlier than planned, often due to health issues or circumstances outside of their control. They're now facing higher costs than expected, while at the same time they're dealing increasingly with uncertainty about Social Security and Medicare benefits. Meanwhile, traditional retirement tools alone are proving to be insufficient for an increasing segment of the U.S. population. Solutions-based selling acknowledges the reality of increasing costs and the toll that it takes. When you recognize that even the seemingly affluent homeowner is likely struggling with cash flow today, home equity becomes a strategic resource rather than a last resort. How have your conversations with potential borrowers evolved in the last year or two? You can let us know in the comments section below. And also, before you go, if you did find value in today's episode, consider sharing it on your LinkedIn network. While I am signing off this week as your host of Heckam World's weekly content and shows, well, they're going to continue on uninterrupted. It's really been an honor and a pleasure to join each of you each week. God bless.